All right, we're going to be looking at gold during Asian session, and the marking out these 15-second swings, we're able to correlate it with this, and this. So we get a good indication here, and we get a correction, and we get a continuation. But if we look at the 15-second, you'll notice that the notes say a little bit something different, because we do get a good indication here, and we actually, if we take this as the indication, meaning this candle to this candle, we do get a 618 retracement here, but we actually don't have a good point of interest. We did not come back to touch the point of interest. So basically there was no trade there. It would have been nice if we went up, closed above, and came down, and it would have been a good confluence between the fib and the point of interest on this virgin wick on the 5-minute. And so if we look at the 15-second chart, this swing, this actually looks like the indication, either this indication or this entire thing as the indication, and we retrace. This looked like the correction, and this looks like the continuation, and then all this looks like it all ended. But when you look at the 5-minute chart, this part is actually within right here. If you look at the 5-minute, you see that this part is actually two lines. It's just squinched together. That's why there's two dots there. And also, this looked like it was petering out, but this was just a stretched out correction here. This is actually not a correction. This is actually within this red candle, this movement. And then we do get the correction and then the continuation. So all this is still correction, and we still did not close above the POI, the virgin wick of this right there, that wick. And we do get the continuation, and it did break this structure right there. So that's the continuation here. And actually, this is the continuation, and then this is the correction again. And then this is the continuation again. Like this. Draw this virgin wick. This indication here. This correction here. This indication here to here. Not here. Not this. But this, using the CCT framework of the 5-minute candle, telling us what is indication. So indication does not end here. Indication ends here, correction. And then here, when we did continue, this becomes the new indication. This is the correction. And here we do have closure and closing and inverting the fair value gap and then close. So here was actually a trade like this, strictly by rule of the closure, or actually here, like this closure or this closure, and that's more than a 1-to-1 if we do it like this. So indication, correction above the POI here now, using this virgin wick, and continuation. Right there. And here's another example. This is on the NASDAQ Asian session, same session. We had this as the indication. So it's really useful to draw these and have them synced synced across the layout so that this is drawn exactly as that. See all those dots? That's because all of this. And that's superimposed on the 5-minute, letting us know that this is an indication. And here we actually have two trades, which is interesting because we have the indication here based on the 5-minute CCT framework like this. Indication and correction, we do close above a virgin wick right here. And that's this thing, this little thing right there. And we do close above and close below. So here's a trade from this POI. And then the question is, what's indication and what's correction now? This becomes a little bit more iffy because of this double bottom looking thing. But if you look closely, this low is lower. This is actually a higher low. So in reality, this is still a correction up to here. And then this is the continuation down here. So this actually moves over like this as the continuation. But it's starting to lose some momentum. But the CCT candles for at least this front part, we had a trade here, indication, correction, continuation, and then still a correction, and then a continuation here. Although, yeah, those actually did not have closures above the point of interest. So this was the trade actually. Right there, using this point of interest, which I don't know about this swing, but CCT does indicate it as that. And if we use the 5-minute line schematic, it will be this thing here, meaning that this is the indication, this is our theorized correction from here to here, and then this is the correction up here. And then this continuation, whether we get it fully right or not, we had a proper entry here at this point of interest using this virgin wick. And then you just trade it from here to here. So even if it's not a full continuation, you still get the meaty part of the move. Like this. Catch the meaty part above POI, strictly based on the CCT framework. Visually, it would have been hard to pick out this swing, but CCT does indicate it has a virgin wick. We have close above, close below, and a quick meaty part of the move. Okay, this is interesting. So we never did close below this. And so we actually did start to turn around, and we're getting upside CCT now, with this being the point of interest. Right there, and this virgin wick here. So we're getting a setup for a long. If we close below this and close above, and it's coming to set up. All right, we're seeing it play out in real time. Okay, this is good. We're getting a FEP here. If we could come down, getting some FEPs here. If we could inverse these and penetrate this POI based on this wick right here. You see the CCT framework. Get closure, get this nice move. So we're going to be monitoring these for inversion of the FE fair value gap. All right, so I've turned on the fair value gap indicator. We had a bullish one that got inversed and we're still heading down. So this is not a fair value gap per se. When it turned pink, it just means they inversed the green one. We don't have a bear one to inverse quite yet. If anything, we have a bear value gap here that we could inverse, which would be bullish. From a FIB standpoint, we are at the 786 and the 096 area. I'm just wondering if it's going to negate this bearish sign by closing above. And I wonder if the indicator is going to pick up this fair value gap. For some reason, the indicator is not picking up this bearish FEG such that we can inverse it. Well, it's looking like it's a moot point anyway. We're heading below more than 0.96 of this fib here. Okay, so this is where the idea of inversing a fair value gap would have saved us, because if we would have just entered at the 786 to the 0.96, then we would have been stopped out. So yeah, the confirmation is, after all, a good idea. What I mean is to wait for the bearish fair value gap, whether this is one or not. If we close above this, and then we put a long position. We want to inverse some sort of fair value gap, like that one. So I don't know if we're going to get that. All right, it's dinner time, so I have to close this. But after we go through here and down to here, it really doesn't look like we have much of a, let's see. Oh, yeah, it looks like we just never did get a closure above, and we're already continuing. So this is already the correction, and this is the continuation, because if we look here, we have this, it's like this. What we said was that we thought this was a indication, but the way it moved and it exceeded this low, this is no longer an indication for consideration. We're not considering indication, correction, and continuation. And we were saved by the fact that we were waiting for inversion of a bearish fair value gap so we can go up for the continuation. This is not indication, correction, continuation. So yeah, it turns out that all of this is still a continuation, meaning this is the indication, this is the correction, and then we're making this continuation here. Indication, correction, continuation, not indication, correction, continuation. We can just add to the earlier idea that here's the fair value gap, and if we would have closed above it, came back midline and touched it, could have entered using this green box, targeting that. But it turns out that when this indication, right here. So follow the 5-minute. So down here was exceeded here, and we never had the inverse of the fair value gap here, that it saved us. It did reverse here, but by that time we already exceeded this indication low. This is lower than that, so we're not really going to be able to call this an indication anymore. Instead, this is the correction. And then anyways, let's continue. And if we do look over here, we had the indication now this way, and this is a correction, and here's a virgin wick as indicated by this right there. That right there. Indication, virgin wick. This is the indication. This is the correction. Point of interest. Close above, close behind, or close above, close below. And if we do this, we have the indication, the correction, and the continuation. And 7A6 of this swing. 7A6 of this swing. And we basically closed here, and if we would have waited for a little pullback and entered somewhere around here, we would have gotten like a 2R.